So today we're here with John Berner. Thank you so much for coming over. And you have some advices for the ones that are getting ready for make their loans, correct?
Yes, I do. Thanks for having me. I really appreciate the opportunity to spend the afternoon with you at this open house. I do. If you're looking to buy a house, then I really suggest to make it a priority in your life at that moment. And what I mean by that is focus on what's going to be needed for the loan. Think about how much of a monthly payment that you want that's going to allow you to be comfortable. Because of affordability and not having to worry about making that payment, nobody wants to put you in a home that you can't afford or put you in a payment that you can't afford. Even though you may qualify for it from an underwriting perspective, there has to be a comfort level around it, and I think it takes a lot of thought to what that may be. The next piece is it actually may be easy to get qualified for financing, the path to get to the settlement table can take a lot of work. You have to prove your income. You have to prove the money that you have that you're going to put into the transaction. You know, if you own other properties, you're going to have to pull up documentation or provide documentation. You're going to have to provide ID. So I suggest getting organized as early and as quickly as possible when you realize that you want to make a home buying decision. So you're going to need items, or your client's going to need items like last 30 days worth of pay stubs, last 2 years W-2 statements, last 2 years of tax returns, banking statements, wherever they have their money deposited, last 2 banking statements, all pages, a valid identification. And projects just seem to work better for those clients that find those documents, secure those documents, and have them organized and ready to deliver during the pre-qualification or pre-approval process. Because most lenders are going to ask to see that information, to verify the information that you input into the application. Application. And then as you're out home shopping, you want to keep your file fresh with those documents. So as you earn a pay stub, share that with your lender. As your bank account cycles again, share that updated bank statement with your lender. If something new happens from a credit perspective with yourself or your personal profile, let your lender know about that. Because in today's market, when you and your client or the client and their agent, you find that you got a dream home or that property that you like, you need to be able to act quickly, and you're going to want your lender to customize a pre-approval letter. So up-to-date and valid documentation just helps the process. It smooths it out, minimizes the drama, and also minimizes the anxiety of getting denied or turned down because your lender has the most accurate and up-to-date information where you've proven your income, or your client's proven their income and proven how much money they have to put into the transaction.
Awesome, thank you.
You're most welcome.
Any advices of what they should not do?
Yes. If you're serious about buying a house, then make it a priority. Don't buy anything else. Okay? Don't go shopping for furniture. Don't buy a new car, because you're going to be underwritten at a point in time. And any changes to that profile for that particular point in time could upset and disrupt your underwriting decision or your pre-qualification. Save as much money as you can. Stop spending money, save it. Because showing money in your bank account is very important. The more you have, the better it is. You may not need to use it for the transaction, but whatever you're not using is called reserves. And reserves make a big difference when it comes to underwriting. That's money you have left over after you buy the house. Okay? Save as much money as you can. Don't go open new credit. Please continue to make whatever payments you have on time. And maintain your job. You know, don't lose your income. So those are the big 4.
Okay, awesome. And what do you feel that is the most common questions they ask you?
what's my interest rate going to be and what's the payment? Okay. Interest rate, and of course then a payment is determined by multiple factors. What the loan to value ratio is on the loan that you're trying to apply for. Loan to value ratio is the balance divided by the value of the property, or other words, more simply put, is how much money you're putting down.
Yeah.
What is your credit score? Do you have reserves and assets left over after you make the loan? What type of property are you buying? Is it a Class C manufactured home, or is it a condo, or is it a single family detached? So all those factors come into play when determining the interest rate and therefore the payment.
Awesome.
And I circle back to what I said earlier. It really starts with determining what's the maximum payment you want to have that's going to allow you really to put your head on the pillow at night and sleep.
Yeah.
And not think about it or worry about having to make that payment, or getting a second job or losing a second job in order to afford the payment. And then a good loan officer will back into maximum financing based upon that payment amount that you like or desire, and then put a program around that, so then, and pre-qualify you for that program, so then you can go out and shop in confidence, knowing that, one, you qualify for this particular property, but two, I'm not going to get anxiety over trying to make that payment.
Okay, awesome. Thank you so much.
You're most welcome.
Thank you.
My show.